Ring the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting it down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Tim Stenovec and Jess Menton filling in for Carol Masser. Welcome to our Bloomberg audiences across our television, radio, and originals platforms. Interesting day here in the market. Tim, we talk about basically everything in the red right now. The NASDAQ 100 are holding on to about 1/10% gain.
Is it?
Yes.
Wow.
Tim, I just said that.
Okay. Well, I mean, I'm showing a little bit of a decline. I guess I gotta refresh my screen.
You have to get one of those Bloomberg terminals.
I do. I mean, energy is one solid outperformer on the day today. On a day where we see, WTI and Brent crude just move higher on the day. So we do see a little bit of green there.
We do, and then also technology up about 0.4% in the S&P 500. I know we are obviously in the month of September, and everyone likes to talk about the seasonality weakness, but not necessarily. Bank of America was actually talking about how when you see a strong first half in the S&P 500 up about 15%, that doesn't always necessarily bode poorly for the month of September. So obviously we still have a whole roughly month to go, so we'll see how that shapes out.
It all comes down to yields, doesn't it, and how things shake out there. With the 2-year now approaching 5% once again, this is something that people are going to focus on as they figure out how to value stocks moving forward.
Yeah, absolutely. And to Jess's point, too, there was another note out by the folks over at HSBC, and I thought it was interesting because they were saying that when you really go back and look historically here, look at that sort of stock market almanac here, a lot of those September losses that you saw were actually driven more by fundamentals, driven more by events rather than that seasonality and cyclicality that I think a lot of people think might actually repeat itself. Of course, here we are, and I guess, what is it, only the second trading day of September, so
it's early.
We got quite a few before we'll find out who's right and who's wrong, but nevertheless, we're going to have a lot of fun along the way. Dow Jones Industrial Average not having much fun on a daily basis, down about 0.6%, or roughly 196 points. The S&P lower by about 19 points, or 0.4%. We were talking a little bit earlier how even with Tesla rallying 4 or 5% on the day, that's not enough. More than 400 stocks lower on the day in the S&P. The NASDAQ down 11 points, or about 0.1%. And the Russell 2000, that's your big decliner on a percent basis, down more than 2%.
Yeah, continuing to peel back those layers, Romaine. On the S&P 500, you had 88 stocks move higher, 414 moved lower today. On the Dow, 8 only advanced. Scarlet, 22 moved lower.
Yeah, and let's take a look at how the industry groups have fared for the day. 24 groups, and you could see only a handful of sectors in the green. Autos and components, that's Tesla there, up by 3.8% as a group. Software and services up almost 1%. And we should mention, of course, energy. Tim, you talked about energy being a bright spot in the market. The group had gained as much as 1.6%, so this is a far cry from the advances earlier. On the flip side, you have home builders leading down the consumer durables, transportation losing ground by about 2.3%. Those are the airline companies, and materials off by 1.8%.
All right, let's get to some of the gainers. I don't know if I've ever done gainers before, guys, but you know
Get excited.
I thought with Carol gone,
why not?
I can do whatever I want, and I'm going to do the stocks that moved higher today. Scar, you hit the nail on the head talking Tesla, certainly at the top of the S&P 500 on a points and percentage basis, up 4.7%. This after the company reported yesterday, I should know, that China deliveries surged last month. Tesla delivering 84,159 vehicles from its Shanghai plant in August, 31% jump from July, 9.3% increase from a year earlier. Tesla, remember, also cutting prices and rolling out its long-anticipated revamped Model 3. And then oil and oil-producing stocks higher today. Occidental Petroleum, to name one, 2.5% to the upside. This is WTI and Brent moved higher. Energy, among the best performers, I should say, in the S&P 500. And then Airbnb. This is a fun one. Along with Blackstone, replacing Lincoln National Corp and Newell Brands in the S&P 500. We learned late last week that would happen. This is the first trading day since.
Yeah.
And investors certainly like that. You know, you get to those passive flows. So up 7% for Airbnb.
I'm curious, Tim, in 20 years, which one of those stocks is still going to be in the S&P, Blackstone or Airbnb, or both?
Well, I have no idea.
No. I wanted you to go.
I would say, I'll say this. I think both will still be in it.
Okay, there you go.
What do you think?
I don't know.
Yeah.
I'm punting.
Okay. Well, hey, here's the deal. I'll see you here in 20 years. Okay.
Maybe.
I love that.
We will figure out who won, who was right, and it'll be fine.
Okay, Tim, you're more optimistic about Blackstone than I am.
I'll go ahead. I'll grab the losers, the decliners for Tim, since he did the gainers today. But taking a look at, of course, United Airlines, have to point that out. So the stock closing down about 2.5%, its worst drop since August 9th. So obviously it did pair some of those losses on news that it's nationwide. Ground stop had been canceled. So we did see that stock down more than 4% in afternoon trading. Of course, I have to turn to Manchester United, down 18% at the close. So this is its biggest percentage drop on record. So that did come after a report that the Glazer family is going to take the club off the market after failing to receive offers that matched their asking price. And then Pulte Group, down more than 5%. So this is in the home builder space. It's its worst drop since October of 2022. It's among the biggest decliners in the S&P 500 today, and a lot of those shares in the home building space getting pressured by a rise in yields there. Romaine.
Well, let's talk about those yields here, because you talk about the start of the session about 8 p.m. New York time last night, and yields spiked higher pretty much across the board, and they stayed elevated all through the session here into the close. 494 and change right now on a 2-year yield, higher by about 7 basis points, and you saw similar moves of roughly 7 to 8 basis points across the key parts of the curve, including the 10-year, 20-year, and 30-year. Now, some of this, some people are saying, is tied to this deluge of issuance. We were learning that at least as many 16 investment-grade issuers might be coming to market this week alone, and what is traditionally here been a relatively busy week for new issuance, that first sort of few trading days coming out of the Labor Day holiday here in the U.S. That could put some more upward pressure on yields as we go forward. But of course, all told, this still circles back to economic conditions, and economic conditions that, if you believe some of our guests, guys, might be in that Goldilocks mode.
Well, for now, everyone's waiting for the Fed to do nothing in September and then look at all the data before they decide to move forward. So you mentioned all the corporate bond issuance, like, let's do it while the window's open.
I wasn't here for Jackson Hole. Did they do something then?
They talked a lot.
Okay.
You weren't there? You were on vacation?
No, I was stuck in the mud at Burning Man. But Jackson Hole,
you'd still be there.
I'm glad you made it out of there, Romaine.
Yeah, it was crazy.
Hey, we just chatted with Abhay Deshpande over at Centerstone. He's the CIO over there, founder. And it's an interesting commentary about likelihood of a recession. He still considers, he's in the soft landing camp, even though he thinks there's going to be a mild recession. He did warn of weakness, especially at the sort of the lower end of the economic spectrum. He pointed to recent issues with Dollar General, for example, and what they've said about their own consumers and what they said about their most recent quarter. But he's pretty optimistic, big picture, Romaine.
Yeah, and I mean, and we were going through a little bit earlier here on the television program some of the expectations for a recession. The idea that Jan Atzias and the team at Goldman had that note basically saying, well, only 15% case. But even like some of the more, I guess, aggressive calls for a recession have come down pretty significantly. We're talking now 50 to 60% probabilities compared to what earlier this year was almost near certain probabilities that people were pricing in.
I think another big thing, because we were talking about yields dictating the trajectory, especially when it comes to the stock market, but also the dollar. If you look at the DXY, it's trading around 104. That 103 level has been really key. But right now, if you look at the RSI, it's right under 70, which would be that sort of overbought level. So that's another thing I'm going to keep an eye on in addition to yields as far as how that impacts stocks.
And of course, we've got a lot of Fed speak coming out today, coming out for the rest of the week. Then they go into their quiet period starting Saturday, where we don't hear anything for the next 1.5 weeks almost. That's a long time to go without Fed speak.
Well, I mean, for some of us, we're kind of relieved that we can go that long without
What are we going to
Fed
talk
speak.
about?
I mean, Jim Bullard tomorrow, Romaine, even though he's not at the Fed anymore, but he'll be speaking in the morning.
What does this bicycle have to say? Just real quickly, guys, we do have some things to talk about. There are actually earnings, believe it or not. Earnings never sleep here. I just go through one Zscaler, of course, a big cybersecurity company. Those shares up about 4.5% here in after hours trading here on what looks like a pretty solid beat across the board. And more importantly, a fiscal 2024 forecast that it's giving coming in above expectations on an adjusted EPS basis for the full year, $2.20 to $2.25 a share. The street on average was looking for $2.09, and even on the revenue side, $472 to $474. The average of street estimates was below the lower end of that range, guys.
I go to the press release to get some color. The company's founder, chairman, I should say, and CEO, Jay Chaudhry, saying, quote, "We concluded our fiscal year with strong top-line growth, record operating profits. In less than 2 years, we doubled our annual recurring revenue, surpassing the $2 billion milestone. With cybersecurity as a high priority, IT executives are modernizing their legacy network security with our zero trust architecture."
We also have earnings from GitLab. Have you heard of GitLab before, Romaine?
I have.
It's an application software company, and that stock also moving higher in after-hours trading by almost 7% after it boosted its full-year revenue forecast, and it beat analyst estimates for the quarter that ended. Revenue of $137 million, if you round it up, is better than the $129 million that analysts were anticipating.
And when you're looking at both of these companies, Tim and I actually coming up have Dana Simberkoff, who's actually over at AvePoint, who's going to talk to us about cybersecurity and why it might not necessarily be ready for the AI boom. So it's interesting when you're having these two companies report back to back after the closing bell today.
You like the deep tease that Jess Menton did?
I did. Her voice even crackled as she was reading that.
I know. We're gonna get her a cup of water in the break. In the meantime,
do they not have tea over in the radio studio?
Apparently not.
No, we have to get our own stuff,
Wow.
Romaine. We have to
The struggle is real.
Yeah, the struggle is real. Well, it's not a struggle to spend time with you guys, but unfortunately, we have to go. We are going to see you tomorrow, same time, same place. That does it for our Beyond the Bell coverage. It's our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals, and on YouTube. Catch us, though, same time, same place tomorrow.